Welcome back to TV5 News at 9, everyone. It is time now for Aging in Style with American Retirement Advisors. Joining us now, of course, is President Owner Joe Vitale. Joe, it is so good to see you. Thank you so much for calling in. How are you?
Doing good, Blake. Good morning. How you doing?
I'm great. Thank you for being here. Now, before we begin, of course, just want to remind our viewers at home to scan the QR code on your screen, and you'll get to sign up for Joe's newsletter called Financial Vitals. It's for financial news and market updates. Speaking of, we are discussing market conditions. So, Joe, we've sure seen a lot of influx in the market. Can you give an update on where we are now with market returns compared to the lows?
Yeah, we've seen a lot of volatility this year. We always talk about it. I mean, the volatility's been off the charts, up and down. We were down anywhere between 15 to 30% this year. Now we're seeing some rallies. We're seeing right now maybe 7% on the S&P down, or on the Dow down, and as much as 22 on the Nasdaq. So we've come back a little bit.
Yeah.
But which is, we're starting to see, but we had a couple bad days too, because we also have the federal rate hike coming up as well. So there's still a lot of ups and downs. You're going to see a lot of volatility for the rest of the year, and I think we knew that from the beginning of the year.
All right, good to know. So about that interest rate, they're going up. How is that affecting savings or even our loan rates?
Well, what we're seeing is the savings rates and some CD rates come up a little bit. Even our money markets, I remember we could get 3% on a money market. We're seeing that up to about 1.5% now, where it was at 0.5 or 0.2. So we're seeing those go up. We're also seeing interest rates go up on the loans. We're seeing mortgage rates over 5%. They have come down a little bit. But as a result, of course, we're seeing a little cooling, especially people. The refinance boom was huge. But we're not going to see people move or refinance when they're paying 2 to 2.5%, 3%, and they got to go pay 5 or 6%. So we're going to see a little cooling there. It's going to be more expensive to borrow money. So we're going to see a little bit of pullback there as well. But it's something that had to happen. We're also going to see probably Friday the Fed will probably raise rates about 0.75%, because they have to cool the inflation, and there was just too much spending away. And now that's intentionally what it was done to cool the spending, to reduce the inflation. And I think we'll expect to see a 0.5 point to 0.75 point rate hike on Friday.
All right, well, good to know. Good heads up right there. So, Joe, for retirees, though, taking out the required minimum distributions, how should they do that? How should they plan to do that given the current market?
That's really important, especially because if you're too heavily weighted in the market, you really don't want to take your money out when the market's down. You'll never make that back up. So How do you do that? Well, make sure you have a good diversified portfolio. We talk about that all the time. We like to have a lot of dividends so that you can take your required minimum distribution almost just off dividends without selling one stock. Or we also have a guaranteed bucket of money, or a safe bucket of money, where we can always pull money from when the market is down, so we don't have to worry about selling when the market's down. Another thing to remember too is for retirees who are taking required minimum distributions, some retirees, believe it or not, don't need that money. They're like, oh my goodness, I don't want to take this money out. I don't want to pay taxes on it. Yeah. Well, we have qualified charitable distributions where that money can go directly to the charity of your choice. And you don't have to pay tax on it, neither do they. So it's a great way to, if you are charitably inclined, to make sure that money goes where you want it to go, and you don't have to pay tax on it. So very good thing to do. Give us a call. We'll help you with that as well.
Of course, glad that you're a resource, Joe. So for retirees, how does anyone, I guess, kind of plan for a type of rapid change in the market? Do you pull back? Do you dive in?
Yeah, that's the $1 million question, right? Everybody's like, oh my goodness, buy low, sell high. When am I going to get in? Now is the time. When are we at the bottom? That's the problem with market timing. Because everybody says, oh, I'm going to pull back, I'm in cash right now. Well, you just missed a 15% rally. A lot of people, they get in too late, they get out too early, and they just sit on cash and they never get back in. The thing is proper diversification, making sure that you have the bucket of money that's safe. Make sure you've got money that you can live on. Make sure you've got emergency fund money. You've got the 3 to 6 months. You don't have to worry about the market volatility when you're properly allocated, when you've got money sitting there. I like having money in the market, but I also like having safe money. So we don't have to, you don't want to check the market every day, and that's the problem. Is those who are living and dying by the market and checking it every day, it gets a little heartburn. You don't need that. Right. You want to enjoy your retirement. So again, getting back in the market with good quality stocks that are paying good dividends, I think is very, very strong and a solid way to do things. But that's where professional management comes in. Get the emotions out of the game. Make sure you have somebody else like us helping take care of it so that you're not worrying about it all the time. And that's where the bad choices are being made, where people, am I getting in? Am I pulling out? When am I going to do this? Get out of the game. It's too hard to do it.
Very good. Some sound advice for sure. So you mentioned the key word in your last answer, proper allocation. We've talked about this. Remind it what it means, and in this environment, what you recommend to those who are going into retirement.
As a fiduciary, we want to make sure that we have your risk tolerance in order, because we can't put you too heavy in the market. We have to make sure that we're according to your risk tolerance and your age. So it's good to have proper allocation with safe money. You've got money in a safe bucket that you really can't lose. It's there. It's getting a decent rate of return. It's always accessible. 3 to 6 months emergency fund, cash on hand. And then you've got your growth money. Then you've got your tax-free money. Then you have your taxable money. So you want to make sure you're allocated with tax-free, with taxable, with growth, with safety, where money you can touch at any time. And too many people, they just don't know how to do that. And they're like, I don't want to pay all these fees. You can do that without a lot of fees. You don't have to pay a bunch of fees. There's ways to do this. So we can help with all that. Definitely give us a call. And to get the professional advice in the allocation, and that's important because too many people don't realize what is out there and what a fiduciary and investment advisor can bring to the table. It's important to make sure you know everything. And I love to educate people, help them know what the allocation is. Make sure you've got your rainy day money, your tax-free money, and money if you never use. Hey, wouldn't it be great if you never use this to go to your beneficiaries as tax efficient and tax-free as possible? Who wants, and people are like, I don't care. I don't want to leave a boatload of taxable money to heirs, and then all this big tax bill goes to the government. Let's make sure we're as tax efficient as possible, as safe as possible. We have growth and safety. Proper allocation is very important.
Well, Joe, it's been great. Thank you for coming in this morning and sharing some of your knowledge and advice in these past few minutes. Thank you. Anything else you would like to add?
Great to see you again, Blake. And yeah, absolutely. Give us a call. Anything you need, 833-NO-JOE. We're here to help you. And it's important just to keep your head in this market because we never know. We never know when the ups or the downs are. Nobody has that crystal ball. But if you're properly allocated, then you can weather the storm and just have peace of mind in retirement.
Very good. 833-NO-JOE. Joe, thank you again. And for the latest financial news and market updates, be sure to subscribe to Joe's newsletter. You can also get more information on today's topic by going to the Aging in Style page on our website, WNEM.com.